want to start off today's podcast by talking about the precious metals. They had another spectacular week this week. We haven't quite finished the month yet. We got a couple more days next week to finish out the month of September and the third quarter. And in fact, I expect Monday and Tuesday to be strong days to finish out the quarter. I think a lot of portfolio managers are going to be scrambling to add some gold and silver and mining stocks to their portfolios just to window dress them up a bit for the quarter because they've been so strong. You kind of don't want to explain to your clients why you don't have anything in the metals market, why you don't have any exposure. So gold closed today at about 3,760. It sold off towards the end of the day. It was above 3,780 going into the last hour. We kind of sold off at the back end of the day. But, the absolute high, though, was set on Tuesday. So gold hit its all-time record high earlier in the week on Tuesday. It didn't quite get up there today. It almost hit 3,800. It came less than $10, maybe even less than $5 from 3,800. Silver, however, just kept on chugging along, making new highs pretty much every day of the week. It closed this week above $46. And it traded intraday a new high going back for about, 14 years or so. It got to 46.50 and change on the day. Here are the numbers so far on gold and silver. Gold up about 0.5% on the day, 2.2% on the week, 9% so far in September, and 43% this year. Not for a year, but so far in 2025. Silver doing even better, up about 2% today, 8% on the week, 8% in 1 week, 17% in the month of September, and 59% so far for the year. 59%. Now, of course, I don't talk as much about the other precious metals, platinum and palladium, although I have been talking about platinum a little bit more over the past year. In fact, I came out on this podcast, if you recall, when gold was above 3,000 and platinum was below 1,000, and I made a strong pitch that my listeners go to Schiff Gold and buy platinum, because I thought it was ridiculous that you could buy 3 ounces of platinum with a single ounce of gold. Platinum was up 3.3% today. It's up 12% this week, 19% on the month, and 74% year to date. 74. Palladium also not quite as good, but inching out gold. Palladium up 44% on the year. Now, these are not normal gains. And it's not like these gains are happening, at least for gold, at depressed levels, because we started the year at record highs, and now we're just adding to those record highs. Yes, I think platinum and silver were depressed in relation to gold, not necessarily in relation to their own history, although silver, at $30 or wherever it was at the beginning of the year, was still cheap compared to where it had been in the past, but it wasn't anywhere near a record. Gold was at a record, and now it keeps setting new records. But this would not be happening if inflation were well contained. And if we really were headed back to 2% in 2 years, like the Fed claims, if inflation hadn't been beaten into submission the way Donald Trump claims, every time he gives a speech now, whether it's at the UN or whether it's at Charlie Kirk's funeral, he talks about how inflation is dead and buried, right? How we've got the hottest economy in the world, it's the greatest economy in the world, and we've got no inflation. Well, if we really had no inflation, gold would not be doing this. Silver would not be doing this. So these are real world market indicators that there's a problem here. right? And that is inflation. These are inflation hedges. These precious metals are very sensitive to inflation expectations. People expect more inflation, they buy more gold and silver. So that's people voting with their feet, right? They're walking away from dollars and they're putting their money where my mouth is, and they're buying gold and silver. So this shows you that what Trump is trying to sell you and what the Federal Reserve is trying to con you into believing are not true. And when, by the way, talking about cons and, people trying to sell you a bill of goods, Bitcoin continues to drift lower. As I speak, it's barely holding 109,400. So it's been down on the week. Yes, it's still up on the year, but only 16%. That's not much when you're talking about 43% up in gold and 59% up in silver. It can't even beat Ethereum, which is up 20% on the year. But both of these tokens are being dramatically outperformed by physical precious metals. In fact, again, I've talked about this, and I'm going to keep talking about it because the Bitcoin community keeps ignoring it. But now Bitcoin is 22% below its August high last month, priced in gold. So in terms of gold, from where it was at its peak last month, Bitcoin is 22% lower. That is an official bear market. And in fact, if you go back to the Bitcoin peak of November of 2021, that's almost 4 full years ago. Bitcoin is 20% lower now than it was then. So despite all the hype, despite all the ETFs and the Bitcoin treasury companies and the first Bitcoin president and the strategic Bitcoin reserve and all the Super Bowl ads and everything that Wall Street has thrown at you and the Trump administration, Bitcoin is in a stealth bear market. And if Bitcoin is holding itself out as a digital version of gold, why is it in a bear market versus gold? And I think it's going to accelerate, right? I think that Bitcoin could get clobbered in Q4. It could end up finishing the year below 100,000. And gold could end up finishing the year above 4,000. Because I think we're going to see a lot of strength. The PCE, personal consumption expenditure. Now, this is the Fed's favorite index, right? And I think it's their favorite because it's the lowest, right? But the PCE on the month was up 0.3, which was expected. But that's worse than the prior month, which was 0.2. So it got worse. Year over year, up 2.7%. The rear view mirror was up 2.6. Now, yes, everybody expected it to go up to 2.7, but it went up. It's not going down. Why is the Fed cutting? Its favorite inflation measure is moving further above its 2% target. So why are they cutting rates? Why are they saying they're going to have more rate cuts? And it's worse when you look at the core, because apparently the core is the one they think is the most important. And the core was up 0.2, which was a little bit less than 0.3 from the prior month. But year over year, the core is up 2.9, the exact same as the month before. 2.9, it's almost 3. You're 50% above your target. Why the hell are you cutting rates? I was listening to this discussion on television today, and people were acknowledging, they were saying, well, we don't really need these rate cuts, right? Because we have this strong economy, and we got low unemployment, and we got a record stock market. So we don't really need the rate cuts. Well, we only need them if you want to prevent the stock market from crashing, if you want to prevent the economy from imploding, because the only reason it's not is because these rate cuts are coming. So you may not think we need them. It's only because we're getting them that the stock market is at a record. You can't say, oh, look, we don't have to cut rates because the market's at a record high. If we weren't cutting rates, it wouldn't be. In fact, the Fed should be hiking rates. Shouldn't be. Not only should it not be cutting rates, it should be hiking rates. And then the market would crash, right? So with the economy, in fact, the economy is already weak. When they keep talking about the low unemployment number, that's all BS. Unemployment is high. The numbers aren't accurate. That's the problem. But even some of the numbers, like the U6 number at almost 8% or 8.1 or whatever, I think it's over 8%. It's high unemployment. One is 100% tariff on pharmaceuticals. I think these are branded products, not the generic ones. But if it's a brand or a pharmacy, 100% double. But then he said, well, but if the company has a U.S. facility or is breaking ground on a facility, it won't apply. So a lot of the big European pharmaceutical companies have a presence here, right? They don't make all their drugs here, but they make something here. But obviously what's going to happen, again, unintended consequences, if I am a drug company and I don't have a U.S. presence at all, okay, now I've got to break ground on some facility that I'll probably never complete. I mean, who knows what I'll actually do, but I just got to convince Trump that I'm going to build something, and then I don't have to deal with the tariffs. But obviously, Americans are going to have to pay the cost of this wasted construction project that's never going to be completed. But there will be ways of getting around it. And of course, every time Trump has tariffs, there's a long line of companies that want to grease his palm to get an exemption from those tariffs, right? It's such crony capitalism when you do this, because you basically say, here's a tariff, but if you want an exemption, what do you got for me, right? This is, the whole White House is for sale, and it's not necessarily the U.S. government that gets the money. It could be the Trump family that benefits from giving out these tariff exemptions. But it didn't stop at pharmaceuticals. And Trump, by the way, is justifying all this as a national security threat.